I think there's a real possibility that we're going to turn today. That we got down here to 22 and change, I guess.
Yes.
High 22s. I think we're very close on both the miners and the metals, and the dollar is the key. Lower rates will help, but absolutely, if I'm right on the dollar, I'm absolutely right on metals, and my call hasn't changed at all. I think everybody hated the market at 3,500, and even at 4,000.
Yeah.
It was in most people's mind just a matter of which day are we going to get out, because this thing's going to roll over. So you got above 4,300, and that 300 point run to 4,600 brought in a lot of the bears back to the bull side. But what I and at 4,600, I pretty much had said, even when we were down in the low 4,000s, I said I see a setup where we could run to 4,600 and then have a 10% pullback. And so at 4,600, 4,650, I thought we'd probably see something. As we got there, I said, I'm not so sure it's a 10% pullback, but I think we'll get, 5% maybe, or a little more. And that's what we got, obviously back a few weeks ago. And what I have said is that even though a lot of people moved away from their bear position, they had very little conviction on the bull side. They were basically caught up in the tape. Was as long as we have the momentum, I'm bullish. But as soon as you lost that momentum, you saw the sentiment turn very quickly. So I'm pretty comfortable that what we're seeing here is the pause that refreshes. And so, as I say, it's rebuilt the wall of worry. I think there are obviously some people throwing around melt up and things like that now that weren't before. But by and large, I think what we're seeing is there's not a lot of conviction on the bullish side, and there's still plenty of people worried about, the imbalances that are out there, the excesses that are out there, and rightfully so. There are an awful lot of them. So I'm comfortable, and actually think we may be today. We always seem to find a good day to talk, and even though we've kind of set these appointments, well in advance, it always seems to come on a good day. And I actually think today may be a very important reversal day, or close to an important reversal day if it's not today. So, and that I'm talking about so many things.
Would you be open to this correction continuing to unfold back to the battleground of 4,200?
Absolutely. I don't think that's the most likely scenario, but I said yesterday and got people nervous. I said, there is a head and shoulder setup here that could take you back to 4,200. Yeah. I don't think that's most likely. I think most likely is we're going to stop here above 4,400, maybe right here where we got to this morning, and reverse ourselves here. We'll see. I mean, we'll know pretty quickly.
Okay, because you would need that reversal now to fulfill, I believe, a few months ago, and things are fluid. You were thinking 6K by October. Do we have to push that out?
Yeah, probably. I mean, that's insane if we do it in that time. So,
is it the spring?
No, I don't think so. I mean, it's certainly possible. It takes, it's been stretched out all through this. So it's certainly possible, but I think you can still make the case, because I believe it's going to be a very steep parabolic run to the top. You can make the case it happens in the next 2 or 3 months. So it can still happen before the end of the year. I certainly think a lot of it will happen before the end of the year. Whether it pushes into next year or not, I have no idea. As I have said on Twitter many times, the market doesn't care about calendars. We all talk about year end, and it's like there's some wall there that if it's going to be after the 1st, it's something, after the 31st, it's something else. I think it can happen this year. Do I know that? No, obviously not.
Okay. All right. So I want, you talk about other sectors, but I believe you probably thought yields would be would be much lower by now after this October high. And here we are pressing it.
I did not think we'd go back and retest the October highs in rates, and that's what we've done pretty much exactly. And so, my guess was when we were back at 330 on the 10-year, I thought we'd see the gap filled in at 490 and at 390, and there was also another gap at 407.8. So I thought that was possible. I didn't think we were going to go above 410, but it did. But it just looks to me like it's a double top in rates here. And my guess is we'll see. My call hasn't changed. I still think we'll see 250 on the 10-year, maybe before the end of the year, probably before the end of the year. But again, just like the stock market, I'm not worried about whether it happens before the end of the year or after the end of the year.
Okay.
Then you probably back up rates again somewhat, fill in some of the run, and then head back down to much lower lows. I ultimately, in the bust that I'm still calling for, I'm looking for a 0% 10-year, probably a negative percent 10-year.
Okay, interesting.
So I think I'm probably pretty alone out there in terms of saying we haven't seen the lows in interest rates for the cycle, that there's one more low. Whether it's 0 on the 10-year, a half on the 30-year, negative rates for sure on the short end. I don't think that 0.4% 30-year rate that we saw back in 2020 is the low. I think we're going to go below that.
All right. So TLT was your instrument of choice. And, unlike the 10-year, David, we haven't made new lows yet. That's a caveat yet from this October low. But then this must be setting up a pretty good buying opportunity if you still think we have 120 in TLT.
I think TLT basically filled in a gap. Did a retest of its October lows, just like the market, just like the bond market. And I am still calling for 200 on TLT in the bust. So when we get that 0% 10-year, quarter or half 30-year, TLT is probably a $200 number. In the meantime, I think it can run to 120 probably in this run before the end of the year. So if you think about that, that's
a big trade from here.
Surrogate for the Treasury. And we're heading for, if I'm right about the bust, we're heading for the worst, economic and financial crisis we've had in the post-World War II era. Yeah. And I'm saying this thing can double. More than double. That will be one of the few assets that I think will look pretty good in that period.
Okay, so most people are still pretty bearish the dollar. Do you think it has much more left in it to the upside? Were you expecting 105?
I thought we could get up to, somewhere between 103 and 104. So it's pushed above that, 200-day, I guess that is, right?
Yeah, the 200 week, actually. It's a 50 week. 50 week.
Yeah, so it pushed above that, which you don't like to see. But I don't see anything here that tells me it's anything but a counter trend rally. I still believe we're going to 80 on the dollar. And I think it's very close to the end. What you're seeing now is what you see always close to reversals, which is people are getting caught in this, particularly when it pushed above the 50-week there, getting caught in the momentum and, starting to play leapfrog on targets. Okay. I think we're going to 108. Oh, we might be going to 110, so I think we're really close to a major reversal, and my next stop would be 94, 95, ultimately on the way to 90. And then if I'm right, we break 90 and you run pretty quickly to 80.
Okay. So big dollar bear still. So this could be an opportunity. Silver's performed, the physical metal has performed much better. You look at the difference between, here's an SILJ weekly pressing the lows, although silver's come under some pressure in the last, mainly week, had a pretty good break. I'm looking for maybe here, 20 and a half. You still like SILJ?
Yeah, I think there's a possibility. Obviously, I always beg off the, day to day, and that I am not that good at the very short term, but I think there's a real possibility that we're going to turn today. that, you know, we got down here to 22 and change, I guess.
Yes.
High 22s. I think we're very close on both the miners and the metals, and the dollar is the key. I mean, lower rates will help, but absolutely, if I'm right on the dollar, I'm absolutely right on metals, and my call hasn't changed at all. I think SIL
it's almost all one market, David, isn't it? When the dollar is good, you can't be long anything, and when the dollar's bad, you could buy the world.
Yeah, I mean, that's why I'm a macro strategist. When you look, all these markets are right into a same fulcrum. You know, it's like you're right, sitting right on. Either I'm going to be dead wrong or dead right, probably. But you're sitting on a turn in the dollar will make a difference for every other market, particularly the metals. You know, gold looks great. Gold gets beat up so much, and I go, step back. Gold was 1060 a few years ago, and it's now, you know, it's 1900 or almost 1950 on its way to new high. You know, it's not that far off new highs, and yet all-time highs. And yet you would think, by the way the market looks at it, that it's, you know, it's down at 1,000.
Well, you know, one of my followers sent me something that the borrowing rate for shorting gold to hypothecate these trades, it doubled.
Really?
So it's become more and more expensive to short gold. So wherever the bottom comes in, David, I expect it to be a spike because you know, there'll be some kind of massive short covering at the bottom. And
people can't afford to hang on to their shorts. Yeah.
Yeah.